JB, very good to see you. We are diving into the headlines today. I wanted to talk about the recent passage of the big, beautiful bill. A lot of people, and retirees specifically, are wondering how this will affect them. So, what are the headlines they need to know today?
Thanks, Erin. Great to see you as always. A lot of since everything is kind of still moving and developing news, a lot of the top line items are the tax cuts are designed to be made permanent. So if you take, for instance, a family currently making $90,000 in income, if the tax cuts would have expired, that family is currently in the 12% tax bracket. They would have gone up and gusted up into the 25% bracket, which was what it used to be for a married couple filing jointly. So all these tax brackets, they're talking about increasing income levels for those.
Mhm.
Also, with the tax cuts, there are certain things that are developing for folks, individuals who buy vehicles, that they can deduct some of their interest on their cars, which a lot of businesses could already do that, but for individuals, that's a new thing. Other thing that's very interesting is they did not eliminate taxes on Social Security, but for the majority of tax filers, there will be additional tax deductions for folks under certain income thresholds. So for most Americans, all of these there will be tax cuts for most folks because of this new big beautiful bill.
Mhm. And would you like to speak to any of the concern that some people have about whether or not this raises our nation's debt?
Aaron, I think that's a great comment because just passing the bill does not raise the debt ceiling. I
Mm,
think currently on both sides of the aisle, there's not the appetite yet with our elected officials to truly address reducing spending in
mm,
meaningful ways.
mhm,
So if there's not, then these tax cuts, a lot of the folks who like the big beautiful bill, they're hoping we can increase growth rates. So
mm,
if our economy is growing at 1.5 to 2%, and we can get back to the 3% where we were 5 years ago, or even higher, it's kind of like with your family. If your expenses stay the same and you're making more money, then you're doing better. So
I see.
over
Yeah.
a sustained amount of years, if we can increase our productivity, I'm interested to see what happens with the workforce. There's still so many small businesses on Main Street that don't have enough workers to fill jobs.
Mhm.
So I think there needs to be a reduction in spending, but in the meantime, if we can increase everybody's income, then that could help on that side of the coin as
Mhm,
well.
mhm. And then one other takeaway that you and I have talked about before, we are living in a historically low tax rate. This bill essentially kind of makes that runway a little bit longer, which means it's still a good time to consider Roth conversions. Can you speak to that a little bit?
Yes, absolutely. A lot of folks when the Secure Act 2.0 came out, a lot of folks were excited that they didn't have to take RMDs until age 75. So that created a longer runway to do Roth conversions. In this historically low tax time, it's a time that people can convert pre-tax accounts, like we've talked about, the accounts that begin with the number 401k, 457, 403b, pre-tax IRAs, things like that, and convert them to Roth accounts. And you pay tax at the current low tax rates. A lot of the CPAs will say bump the tax bracket, make sure that you don't convert so much that you go into the next higher bracket. Personally, going from a 22% bracket to 24, that's not as big of a difference as if someone's in the 24% bracket. You definitely don't want to go into that 32% bracket
Mhm,
because you'd
mhm,
increase your taxes by a third.
mhm.
So I think that's important. And it's especially important because we know what we have when we're paying taxes if it's a married couple filing jointly. But a lot of times our tax code, that's one thing I wish they would have addressed with this. Our tax code benefits married filing jointly taxpayers. When one of those spouses passes away, it can create undue tax burden and
Right,
cause that surviving spouse to go into a higher bracket.
right,
So
right.
having more Roth instead of more pre-tax accounts, it can be a very good thing.
Right. Well, JB, I'm grateful for your time today because, again, we are just kind of dissecting this right now. We are going to learn more and, of course, keep your clients updated. But I'm grateful that we were able to at least touch on the big takeaways today. If somebody does have any questions, though, if they are interested in crunching the numbers for a Roth conversion with you, what's the best way to get a hold of you?
Best way, they can reach out to us online at hello@beckettfinancialgroup.com, or they can give us a call 803-939-4848, and we'd be happy to have a chat.
All right. JB, again, thank you so much for your time today. I really appreciate it.
Thank you so much, Erin.